With major economic news just around the corner, Bitcoin is preparing for a massive move. Is Bitcoin going to see a continuation toward the upside, or are we going to see a breakdown of these structural levels we have held as support for nearly 6 months? In today's video, these are the questions we're answering and so much more. Let's jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having an amazing day today. In today's video, we are taking a look at the recent price action for Bitcoin, the recent and upcoming economic news, the macro charts, Bitcoin dominance, and so much more. We'll also be diving deep into the short-term price action, going over exactly what is happening, what you should be paying attention to, and what to expect next. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. That is the kind of content you were interested in. Join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you were interested in taking your trading to the next level, you can join us in VIP. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to our group chats, our general chat, our trading chart and education chat, our news, daily video, trade setup, and help chat. If that is what you're interested in, go ahead and contact me in the pinned comment of the free channel by clicking my name or these links down below. And let's go ahead, guys, and jump on in. So taking a look at the last 24 hours of price action, we saw a surge in volatility, and that is expected as we had our major CPI news release. Now, CPI data didn't come in too different than what was expected. If we do quickly go over that result, we can see the actual results were very on par with the forecasted projections, with core inflation month on month coming in at 0.3. This was, however, 0.1 greater than the prior result. That was our prior month data, which resulted in some short-term fluctuations, but pretty much everything else, our month on month for inflation, our year on year for both core and headline inflation, coming out very close to, if not on par with, the forecasted results. We do have major news coming up today that is going to be our PPI data, as well as, of course, our major news being the interest rate data on the 19th of September. For the current projections for interest rates, we are looking at 86% probability for a 25% basis point cut, and only a 14% probability for a 50 basis point cut. In today's video, we'll discuss in much more depth what this will mean and what impact it will likely have on the asset market. Moving over to Bitcoin, with those recent news events, we have seen some sharp volatility. If you watched our prior video, we talked about the possibility for a correction down into this region of support at around 55,500. Actually, we came perfectly to retest that, and we have bounced upwards since. We're going to be discussing in today's video what we expect from here and what levels you should be paying attention to next. Moving over to the market data, 24-hour volume. Let's go ahead and take a look at that. 24-hour volume and liquidation data. We can see once this page loads over here, 24-hour volume is up 36% at 135 billion. 24-hour liquidations up 89% at 146 million. Of the 146 million in liquidations, a significant amount coming from long positions of 107 million and 39 million coming from short positions. Again, that is attributed to the fact that we saw some massive amount of volatility, particularly on Bitcoin, as a consequence of that news results. Moving over to the DXY, we have seen a small move upwards for the DXY. Not too much of a problem. While we do remain underneath this yearly uptrend, we are very much pointing toward that downside. For this extended correction to initiate, we will need to break below this horizontal support level at 100, and if that does occur, we will very likely see that extended correction downwards. If we take a look at the bigger picture, we did break down from a 1.5 year long symmetrical triangle pattern. The measured move of this is going to be the 0.1 to 0.2 applied to the breakdown. That takes us around to 96 to 95 on the DXY if we fulfill that measured move. Again, the interest rate data will have a massive bearing on where the DXY does move to. And of course, guys, if we are able to sustain underneath this VD uptrend, the expectation is that we will eventually see a correction. If we break back above this uptrend, this will be marked as deviation, and then we are now once again range bound. Moving over to the S&P 500, a pretty decent week so far, a pretty strong move upwards from the lows at 5,400. We can see sitting at 5,500 at the moment. We are looking for a macro continuation upwards. We are still expecting a macro continuation of 6,000. If you've been following the channel, we have been expecting 6,000 ever since we broke out all the way back in 2023. We still stand by that, and we were expecting this move, this next final leg up, to initiate as a consequence of the break of that prior high. So only upon the breakout of this prior high on the weekly chart will we then expect that next move upwards to 6,000 to take place. Until then, we are chopping sideways between our weekly highs and this weekly low point. A loss of 5,300 on the weekly will initiate a macro downtrend and the end of what has been a fantastic move upwards for the S&P 500. That is it, guys. Let's jump into Bitcoin. Before we do, guys, if you do want to support the channel even more and you want 15% off your lifetime trading fees, that 15% off discount on your trading fees can build up to 45% off based on your trading volume. You can sign up to my links down below to BitGet, BitUnix, or BingX. Any of those will give you the 15% discount, including some healthy sign-up rewards. You can go ahead and do that with the links down below, or listen to the ad we'll play in just a moment, and we'll jump back into the video. I'd like to introduce our partner, BitUnix. BitUnix is a global non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get stuck back into it. So first and foremost, we are going to be discussing the correlation between interest rates and risk asset prices. We're going to be looking at this both on the short term for immediate impacts on asset prices and on the macro scale, the long-term influences of reduced cost of debt, i.e. reducing interest rates, impact on the risk asset market, Bitcoin, stock market, ECT. Let's take a look at the macro first and foremost. We'll try to keep this nice and brief, and then we'll jump into Bitcoin itself. As we can see, this is our flow chart that represents the impact we generally see when interest rates decrease in the economy. If we take a look at this, we have this relationship between inflation, of course, the representation of what inflation is going to be, and our interest rates. We are expecting a reduction in interest rates moving into the current interest rate data in 7 days. Falling interest rates have two major impacts on the economy. Number one, we see the dollar decrease in value, which is a representation of the DXY falling. And number two, we see debt to service ratios decrease as debt becomes cheaper. Now, this process, particularly the influence of the dollar decreasing in value, and of course, the influence of debt becoming cheaper, takes a very long time. This isn't an immediate acute reaction. This isn't bang, as soon as interest rates reduce, this happens. This takes many, many reductions for many, many months to come into effect. So we're talking about the macro over here. But eventually what will occur is with the decreased debt to service ratios as a consequence of falling cost of debts, we will see both retail, so households, and companies not only be able to have more cash on hand to acquire assets, but they will be able to service those debt acquiring or those income producing assets which they acquire on debt cheaper. Okay, so that increases available household cash flow, which facilitates increased retail spending, which increases inflation, which pushes the dollar down and increases asset prices. What we see from the company perspective is that as debt to service ratios decrease, they acquire debt to buy or to purchase income producing assets, real estate, whether it be stocks, whether it be cryptocurrency, whatever income producing assets you can think of, they will acquire that with cheap debt. They will service that debt with revenue, and of course those income producing assets will be tax deductions, write-offs as revenue expenses as it produces income for those companies. We generally see asset prices increase. So the narrative we are painting here is that the long-term influences of steadily and consistently falling interest rates is incredibly bullish for risk assets as it pushes inflation up over the long term. It stimulates economic growth. This is a fantastic thing. Now, on the short term, there is a lot of speculation in regards to whether or not this is going to be a bullish thing or a bearish thing. Now, if we take a look at the historical influences of reductions in interest rates and we look at how the markets have reacted around those periods, we have generally seen sell-offs, be it the 2001 correction, 2001 correction and the 2006 correction are notable instances. Both of these events, however, have had major drivers at the same time. We had the global financial crash, and of course we had the dot-com bubble burst, and these happened at the same time interest rates actually reduced. To extend on that, the interest rate reductions actually occurred just after, be about 4 weeks after those major black swan events occurred. So we have an instance of correlation, not causation for market corrections. Now, the general Joe and the market is emotional, so even if it gets that association incorrect, which it has, people are confusing correlation for causation. If people expect the market to correct as a consequence of interest rates reducing, the market will likely do so, even if it is not logical, because the market is not completely efficient. So the majority of people are expecting the interest rate reduction, the news event itself, to have a short-term sell-off effect, and that could be possible, something to keep in mind. The reality is no one truly knows the impact, as no one truly knows the result we're going to get from the Federal Reserve until the moment of which that news is released to the public. Moving over to Bitcoin, guys, we can see Bitcoin is still within this macro descending channel formation, and we'll come back and discuss that in just a second. But I want to start on the short-term price action today, as this is more or less the most pressing matter. The key levels we are focusing on right at the moment are represented by these gray horizontal levels. First and foremost, we have got our major structural support below us, which represents as our macro descending channel low. We can see this actually right over here. This is going to be the last line of defense for that macro structure. A loss of this level will, of course, result in a breakdown and invalidation of the macro structure and ultimately send us into a higher time frame downtrend extending from this descending channel formation. Very, very bearish, and at the moment, very unlikely. The next levels we are watching is going to be the prior level of support from that horizontal consolidation we had prior to the move to 64,000. This level of horizontal support extends and eventually becomes a level of resistance, and that is where we are sitting at as we speak. Therefore, if we are able to break through this resistance, and we can see we are challenging and actually struggling now for 2 days on this resistance, a break through this resistance will open up this entire range between 58,000 to mid 61k as a possible range for movement, meaning Bitcoin will have the potential to move as high as 61,600 if we are able to clear the resistance at 58,000. And therefore we will define 58,000 as a short-term trigger point where, if broken, we would then expect a bullish continuation over the coming weeks to retest the mid $61,000 region, provided economic news does not interfere with the expectations and short-term projections of the market. So these are our resistances. We have got 58,000, we have got 61,600, and then finally we have got the $64,000 region, which is its prior level of resistance. Break above 64,000, we are massively bullish and we expect a continuation up to the range high. That is going to be the short-term levels we are watching. In terms of support levels, we have got our critical 55,500 support level and 56,000 sell side liquidity. This is going to be the range of support right over here that we came down and retested just 12 hours ago. If we break below this region, we will be flipping bearish again, expecting a continuation back down to 53, back down to 54, back down to retest this downtrending diagonal trend line. Until then, Bitcoin is showing a degree of strength. It is holding, it is building up these higher lows, which is fantastic. We just need to now break through that current resistance to see the continuation. Until then, guys, anything that happens between, okay, let's go ahead and draw it out. Anything that happens between that 55,000 level, okay, and that 58,000 level should be considered chop. This is going to be our consolidation region, okay? So only the breakdown of 55,000 and the breakup of 58,000 would result in extended continuations in price action. Meaning, if we want to see the price break this range of price action, we need to continue above or below these trigger points. Until then, expect the price to swing between these levels. Okay, perfect. That is it for the short-term price action, guys. Let's move over to the higher time frame chart. So as we've said, Bitcoin is still in this descending channel formation. For us to invalidate the low side, we need a daily candle close below. A daily candle close below the downtrending level of support will invalidate the channel. Until then, this is a bullish consolidation structure. It is a descending channel formation. It is descending at a pretty small angle, if we look at the angle of the trend, which is extending now for 5 and a bit months, over a 22% depth, if we look at the depth of the channel. This channel is moving into a horizontal support as represented by our VRPV and has now mostly filled that gap on the downside. As we can see, we have a whole heap of historical orders and resistance within the mid-level of this channel that starts to slowly die off as we push past into that $70,000 region. That lines up with the range high of the channel, indicating that again, for Bitcoin to enter the next move upwards, we would need to break the range high of the channel. The same invalidation of the low side, we are looking for validations on the upside, meaning a daily candle close above the upper level of resistance would be sufficient in assuming that we are going to see directional continuations toward that upside. Until then, no matter what happens, we are within the channel. Any sort of chop is expected, and provided we are able to sustain at a bare minimum that lower level, we are going to be expecting a bullish macro outcome eventually. Moving over to the weekly chart momentarily, we can see on the weekly chart, we have got our RSI trend line that is starting to curve back upwards. We can see just over here, we are also retesting that 50 EMA on the weekly, which is a great sign. But what we can see here on the weekly is this weekly downtrend on the RSI, and we are looking for a breakout of this weekly downtrend to trigger the continuation upward into the range high for Bitcoin. We're getting very, very close, guys. A few points off on that RSI, about 3.5 to 4 points off. If we get a weekly close above this level on the RSI, that would indicate that throughout the last 5 months, the momentum has been decreasing and has now officially flipped up positive. The momentum has flipped positive, and therefore that would represent that the selling pressure we have seen developing through this channel has actually been exhausting. It hasn't been developing, getting stronger, it has actually been exhausting, and that is a sign of a bullish reversal structure. So it is looking optimistic, it is looking good. A lot does lay on these interest rate decisions, and of course, while we do have these structural levels of support intact, albeit the descending channel formation, that horizontal support, we are at a base of support. We do have the ability to push higher, and only upon the loss of these high time frame structural levels, such as the 2-week baseline, okay, and the $49,000 prior yearly high resistance, which is now a support, a loss of these levels, only those breakdowns would be sufficient in assuming that the bull market is over and we are entering a macro downtrend. Until we break below that $49,000 level, okay, we can see the baseline, the Ichimoku cloud lines up there too. We are in an uptrend, we are bullish. Simple as that. Nothing more to it. That is it, guys. Let's move over to Bitcoin dominance. We can see Bitcoin dominance is still sitting at the same level as it was a few days ago. Not too much movement over here. Our two prior levels of support, now resistance. As we can see, a breakdown over here will result in a altcoin season. We do need to see that occur for altcoins to really start to ramp upwards. I would not assume altcoins are going to do very, very well against Bitcoin counterparts until we see that breakdown of the trend line. Thanks for tuning in, guys. Have a fantastic day. A big week ahead with economic news, but we'll hang in there, stay objective, remain emotionless, and reduce your risk. If you are unsure, if you are uncertain, go ahead and reduce your risk. So remember, trading into economic news, your edge as a trader is at the lowest point it will likely be, okay? There is economic data coming out that you don't know as retail, that people have their information for well before you, hours before you, potentially even days before you, that can manipulate the market, position the market, or even plan their own positions against you. Remember, trading is PvP at the end of the day, okay? Everyone is against everyone. The big players are trying to get your money, so you need to remain calm and do your due diligence moving into events, which is most likely retail slaughters, okay? Thanks for tuning in. We'll catch you in the next one. See you then. Bye.